Hey, good morning. Let's go over today's trade plan. So, heading into the last few days of December, typically we will see lower volumes in the market, which can result in a relatively narrow range. So that doesn't mean it has to be narrow in absolute terms, but relative to the days heading into the last couple of weeks, the ranges can start to contract, and the market can go into kind of a creeper trend. So at this point, we know that overall the picture is bullish, and the buy side is very much in control. The market made a new high on Friday, and at this point in the overnight session, it's still pretty early in the overnight. This video is being recorded at about 2:50 a.m. Central Time, and ES is back up towards the highs from Friday. So that uptrend, that has been in place over the last few days is very much playing out, and the safe bet is still going to be on the long side. So heading into the open, 63 to 65 is key support, the initial support zone. We have the previous VPOC over there. A break below it, in the event that we even break below it, would bring the 56 half to 58 half into play, using that as the micro bull bear zone. And the idea here is basically that, as long as we stay within this range, we can continue balancing at the highs and eventually break out and move even higher. And if we start breaking down below 63 to 65, and especially 56 half to 58 half, that would be a break below this, day and a half or so balance, and that can result in a move down into 50 half to 52 half quite easily, and potentially even 44 to 46. But that is the low odds scenario. Typically, like I said, we will see a trend persist over the last few days of the year, and given that the uptrend is intact, the focus is going to be more on long setups, and just take the low volume into account and be very aware of trade location. These last few days of December are not the ideal trading days. A lot of traders don't even trade, these last few days just because of the light volume and the contracted ranges. And these last 8 to 10 days are a good time to review 2014, review the current year, and set some goals and put a plan in place for the following year. So, a lot of traders I know don't actually trade these last 8 to 10 days just because of the light volume and, the relatively low opportunity potential that is in the market. But if you are trading it, then it makes sense to be very selective at least, and keep the focus on trades that are in direction of trend, unless there are some very clear signs pointing the other way. For example, let's say if we open tomorrow and the internals are extremely negative or something for some reason, then you can make a case for the short side. So you would need to see some extremes, to flip your bias at this point. And unless that happens, it's better to keep your focus on the long side. We have resistance, 74 quarter, 76 quarter. That's basically the all-time high. Above that, there is no hard resistance. We have 86 half to 88 half marked as a range extension target and a place where the short-term, we could see some short-term exhaustion in the market. But even that is not really hard resistance. It's just an area where, it's an estimate that the market kind of exhausts itself up there. And if you're long into it, it's a good idea to take profit. Doesn't necessarily mean that you have to short that zone. So, the ideal setups are still going to be at conservative location, perhaps closer to 66, 67, targeting a breakout above 74 quarter to 76 quarter. And, if we start breaking below initial support, perhaps tighten things up a bit, be a little bit more careful. Below the micro bull bear, short term, the market could shift into, a bearish mode where we could go lower, but again, that is the lower odds scenario. The primary scenario is that the market holds above 63 to 65 and then breaks out above 74 quarter to 76 quarter. So those were the main ideas heading into the open. Let's see how the overnight range still develops. Like I said, this video is still being posted, quite earlier than normal. So the overnight range is still developing. So, let's see where ES opens, and depending on where it's opening in relation to initial support and the prior close, that'll give us an idea of which side is being more dominant. buy side in control overall. So those are our main thoughts. Let's see how it plays out, and good luck trading today.